All right. Well, this is working. It's going to be you and me. If other people, let's see, copy, paste. I'll just have to redo this. All right. They will be able to catch up. I think that might have been some kind of combination of YouTube and OBS. But anyways, still no video. Let's see. Can we get it? Ooh, boom. Video's in. All right. We're going to start. But hopefully you guys will be able to catch up. They'll probably trickle. Hopefully they'll trickle in. So anyways, if you're retuning in, sorry, apologies, little technical difficulties, but Monday morning meeting, we're just going to go through basically the main headlines of last week, what we need to look for moving forward. Yeah, Mac is in. He made it. Sorry, my extremely loud keyboard. And what's coming ahead of us? So I think everybody knows this week is going to be the biggest week in terms of earnings season. This is the official kickoff, so big stuff ahead. Very important just to be prepped, right? So again, so this is our prep time. If you guys are kind of looking at that stuff, this is you and us doing it together. So really quick, our disclaimer: options are not for everyone. Should call 188 options before you start trading and get a copy of characteristics and risks of standardized options. So moving forward, I'm having to skip around on my slides as we had those technical difficulties. Steven's in. All right, cool. Oh, everyone, you guys rock. You all made it. You're amazing. All right, so recap, right? Last, I don't know how many months, it's all been inflation, Russia, and some oil, which is essentially the same thing as the Russia situation. So we're gonna kind of backtrack, look at what happened, look at what's important, and what do we need to know moving forward. So last week, we did have some of those IMF conferences going on, and the majority of that, like the outcome of that, wasn't super impactful. So okay, we made it out. WB is World Bank, if you're not familiar. So the World Bank is cutting global GDP growth outlook to 3.2 from 4.1. If you look at what we have coming this week in terms of economic news, it's actually fairly light. It's very light at the beginning of the week, but don't let that fool you, because it's coming in hot and heavy Thursday, Friday. So what was the biggest headline? So inflation and rate hikes. So it's really like the market's going back and forth. Do we how fast do we hike? And that's actually the biggest thing. We know that World Bank believes that the GDP outlook is going down, even though we're coming out of this, global pandemic. So Bullard, Fed Bullard is probably the biggest hawk, meaning of the Fed presidents. They're aggressive, right? Dove is more like, if you can read these headlines, Bostic, another Fed president, more lenient on raising quantitative tightening. So what are we talking about here? Why does it matter? So what matters is the rate of the increase. So I think everyone is in agreement. There's not a single Fed president out there that's saying we don't need to raise rates, right? So they're all in agreement there, which was probably the first shock to the market. Second, now we have to go into how fast are we going to raise rates? And the market does not do well if interest rates move too fast. So we're seeing a lot of funky price action in the market this last week, Thursday, Friday of last week, and continuing into today. We'll kind of go through some of that stuff. But just from a headlines perspective, it's about how fast are we going to increase rates? So 75 basis points is on the high end from Bullard. Bostic saying too fast. And really, this was a headline, Fed's fast trip to neutral. How fast are they going to get to neutral? So what does neutral mean? That's what you would probably want to know if you're actually paying attention to some of the stuff. So neutral is, I mean, if the inflation rate is 2%, to get to neutral, the Fed really, if the interest rate is equal to the inflation rate, that's neutral. So, so they're going to be raising interest rates and in hope that inflation is coming down at the same time. Right now we're almost at like, I got 7% inflation, which is, I mean, out of control. I think there were a couple numbers that might look a little higher, who knows. And there's I might pull it up later, a CBOE website that we used to use a lot back in the pandemic. Let me see if I have it. Yeah, so if you go to CME, let's see, cmegroup.com, I'm going to put this in the comments here for your reference. There's a site that actually shows what the estimated rate hike is already priced in. What is the market already pricing in terms of impact rate hikes? So Powell saying 50 basis point, that kind of shocked the market. Bullard's saying 75, Bostic saying don't go too fast. And there are talks of this 3x consecutive rate hikes. So what does that mean? So if it was 50 basis point hikes over the next 3 FOMC rate decisions, that's probably like another 1.5 this for like a year and a half, I think. Don't quote me on that. That would put us at like 2%. 2% interest, give or take, on the target rate, and where we want inflation to be. But we need the inflation rate to come down, and in the interim, the interest rate is going to be heading up towards the inflation rate, and getting to neutral is where those two numbers kind of intersect. Jet fuel hit the moving on. Jet fuel hit the headlines, actually. Kind of funny. This goes back to Russian situation. I don't know if you guys remember, but Biden's tapping into the strategic reserves, right? And that was a big deal. The strategic reserve, I mean, we went through how much oil the U.S. consumes on any given day. And what I can tell you is that when we look at these numbers, these historical numbers, recap numbers, oh man, did we blow through some oil, right? And so what we're going to start to see is like pretty funky shortages. There was initially, do I have it here? No, I don't have it written here. So White House quits asking Saudis to pump more oil. So when we tapped into the strategic reserves, it was kind of a strategic ploy to get OPEC and whoever to release more oil. We knew that, well, if we're going to be issuing sanctions on Russia and their oil imports, nat gas like exports, all that kind of stuff, we're gonna need to up production. But we can't increase production fast enough to outpace the supply demand issue that's going to happen, and that's when we saw crude just explode. So right now it's pulled back quite a bit, but we'll see, right? I don't think that we have the permits enough to actually meet where we need to get to. So that's going to be something that we should keep on our radar. In terms of actual numbers, so what we've been looking for across the market, we wanted to see an epic high number come out from inflation and the market rally. We didn't really get that, but we did get that for just a moment, and then the market went into immediately like digestion period, and they were digesting. Well, is this or is this not peak inflation? He did. That is really what the market's looking for. We're looking for peak inflation. So as we move forward, and we'll walk through this, the number that we want to look at is core PCE. So core PCE, that's going to be our biggest inflation metric that we look for, and we're going to get that this Friday. So heads up. The numbers that came out that I kind of pulled something from, So last week, Tuesday, we got housing starts and building permits. The difference here, housing starts are single family homes, things like that. Building permits, similar, but it's more corporate. So any kind of building permits, etc. What we're seeing is just a steady increase, right? So previous 1.6 million, actual 1.78, so slightly increasing, not really going to be market moving or change any kind of outlooks. But what we look at next is we want to see supply kind of increase, but we really want to see demand decrease. So as long as the supply stays the same but demand goes down, that's going to be good for inflation, and that's what we're looking for. Existing home sales slightly lower. We want to see moving forward a lot lower. We're not quite there yet, but at least sales going down, building permits, housing starts going slightly up. If you're selling a home, I don't know how easy it's going to be moving forward from here. So CV leading index. So this is more of a GDP index thing. I tried to look if there was anything market moving in there. Not really. And Philly Fed manufacturing. This was a big miss. So I just listed it here because it was such a big miss. This came on Thursday. I don't think that this kicked off any of the selling. It may have, at least it timed it around the same. But really, this is our. I could click this here and go through. So, manufacturing activities. So GDP and the like, which we kind of knew. So there is that. I'm going to move forward and get into some of the nitty gritty. So we did have a bunch of earnings come out already last week. So we got Walgreens. So we had 12 of the Dow 30 components already report last week. You guys are going to like, this is crazy. We actually have 885 companies reporting this week. So if you're in the IVES system with us, you're in luck because we'll be able to get through all of them and we will be able to pick exactly the very best trades of that whole lot. But otherwise, yeah, there's a lot of sorting to do, no question. Of the 12 that reported last week, so far, we actually have 10 beats, 1 miss, and 1 meet, right? Verizon was the one that meets, and the rest of these guys, even though they beat, you'll probably notice, hey, look, price isn't necessarily going up. It doesn't have anything to do with, price action has nothing to do with whether or not they beat expectations or raise at expectations. It's all about, like, can you come out with something that nobody was expecting. So this week we have 13 Dow 30 components and almost a third of the S&P 500 reporting. So the major components here for the Dow 30, 3M, which we haven't talked about in a very long time. I might take a look at that later. Microsoft, Visa, Boeing. I know a lot of people are looking at these three right here. CAT, Amgen CAT, not huge movers. Apple, Intel, Chevron. Maybe Merck might be a surprise. We'll see. But big day here. Big week for sure. We're going to drill into each day separately. This is just the headlines in terms of economic data that's coming out Monday through Wednesday. Really not much to write home about. So super slow days in terms of economic events. It's all earnings all week. That's really the biggest thing until we get to Friday. Friday is going to be like, Friday, by the way, very few companies report earnings. So Friday, we're going to get hit with that number one core PCE number, the inflation index. And yeah, this is actually all going to lead up to, if you guys aren't aware, not this Wednesday, but next Wednesday. I believe it's like 10 Pacific, and we'll start going through these. Next Wednesday, we actually have the FOMC rate decision. So Friday, core PCE. Next Wednesday, rate decision. So maybe we have a couple run-ups in the near term, a little bit here and there. But, the truth is that every time we get into earnings season, and I'm looking at charts off the side, every time we get into earnings season, the market is pretty flat. So I'm not actually pressing any super bearish bets. We just had an epic fallout, which was I almost feel like it was over 2 weeks average range. But definitely, whatever the market moves, an average week's range within a 48-hour period, the majority of the time you're going to go into a little bit of a holding pattern, and that's exactly what just happened. So, uh, as bearish as it looks, I think the majority of that move has happened. So if you're playing some very far out of the money contracts, just be aware. Look, we're going to be into a holding period. We have earnings coming out. We have some serious economic data happening, and probably from the longer term perspective, wait until after next week and see what that first interest rate decision is going to be, because that's going to really be the determining factor of what's going to happen and where we're really going to start moving. So until then, I really would just expect a lot of chop. So today, Monday, we really didn't get much. None of this stuff actually matters. We have 65 companies reporting. We already got the two bigger ones. We already got Coke, who beat, so they have a little green here, but price impact down 2%, 0.2%, slim to nothing. Activision missed. I didn't actually get hit, but probably because they have that Microsoft situation coming on. So I don't know that their price is really going to move at all based on that. Tomorrow, though, we have a little bit. So tomorrow, 136 earnings, right? So BMO, if you're reading this before market open, we have 3M. Do we really have AMC? I have to double check that. I have AMC listed here, so somebody check me on that. AMC is, oh, I'm sorry. AMC is aftermarket close. What a dingbat. Aftermarket close, we have Microsoft and Visa. So I was like, why would I write AMC here? I wouldn't. All right. On the left, if you're just looking at the stuff, I put this in my time zone, so I'm on the West Coast, so Pacific Standard Time. You guys are going to have to adjust for your time zone if you're not out here with me. Just on a side note, we used to get durable goods orders actually used to be market moving, but again, in this environment, a lot of the things that would typically move a market, they're just not going to be market moving. Things like jobless claims numbers, we'll put this up here, but it's not going to move a market, right? I wouldn't expect that. It's not changing much. We're pretty much there, and it's all about, now we're talking about GDP, right? We're talking about getting back to a productive society and producing goods. So we got some more housing numbers and consumer confidence, which again, not market moving. Nothing here market moving. All earnings. Wednesday, very much the same, right? 227 companies. Look how this ramps. 136 Tuesday, 227 Wednesday. It's just gonna get bigger. We have retail inventories, wholesale. We have inventories, a couple more home sale stuff. What may be market moving is this gas change. So I'm pointing this out right now. I have not heard a single headline, at least on the mainstream media, about the gas shortage. Have you heard anything, Stephen?
I haven't, no.
Yeah. So this is all. So this is last week's change. So we were down eight something million. I got a bunch of notes on this here. Yeah. So I have a headline, and I'm sorry for looking off the side. So U.S. crude oil inventories tumbled 8.02 million barrels. So that's barrels to 413. So this is the biggest drop since January 2021. And the expectation in the market was a drop of 2.4 million barrels. We dropped 8 million barrels. So gas fell by 0.076 to 243. So I have actually our strategic reserve stuff. This is inventory changes. So if there's no extra supply coming, we don't have the permits or the rigs really open. If you look at Baker Hughes numbers, we actually opened three rigs last week. So yeah, we're going to be playing catch up for a while. I mean, there's just been some major moves in the oil market, so I don't know if that's going to actually change. But for us consumers, gas isn't going down anytime soon. That's for sure. So thanks. There you have it. Nothing major. So Thursday, so like 294 earnings Thursday. So we go from Tuesday 136, Wednesday 227, Thursday 294. That's a ton of earnings. So all midweek it's going to be earnings. I think the indices as a whole probably chop as people move money from stock to stock to stock, trying to capture some kind of earnings move, or pull money out of a position just to avoid a potential earnings move. That's very likely. Thursday we start to get into some of the good stuff. It's not the good stuff. We do have, again, like I said, initial jobless claims. I mean, you go look at this. We've been 180,000. I mean, for like the last, I don't know how many months, but it's not really changing anything. Continuing claims, not going to be market moving. So PCE. So these are preliminary numbers. So we have a GDP growth rate expectation, so of consensus of 1.1. That was probably the biggest thing. The last quarter over quarter, so last quarter this year, right, report was 6.9%. The market's expecting 1.1, and that's the preliminary number. So this is what the market or the economists are forecasting for our growth, right? And you kind of like take that and then apply it to your company valuations, and then factor in your inflation. There's some funkiness looming, no question. And we do get core PCE quarter over quarter numbers, preliminary numbers on Thursday. So it's not till Friday where, again, earnings kind of taper off, right? Not many companies report Fridays, just a thing. And we get the biggest number of the week, which is the actual core PCE year over year number. And this is absolutely going to be market moving. I can't tell you anything other than that. We get personal spending, personal income. We get the month over month numbers. But this core PCE year over year for March, that's going to be the one that's going to, that's going to break the whole situation. So remember, the next Wednesday we get the FOMC rate decision, and it's very much influenced by this year over year PCE number. So the consensus is 5.3, right? They've been coming in hot and heavy. So we're looking, and a lot of the market is looking for kind of peak inflation. I mean, if this number comes in lower than consensus at all, or even like at consensus, I actually think that the market like goes like full port rally mode. As weird as that sounds, because that would be the first signal of, peak inflation is going down. That's what we need to see. So if that happens, and this number comes in lower than expectations, at all, I think we're just so oversold right now. Well, not that matters, but we just hit so much selling, tax loss harvesting, whatever you want to call it, that this will be after the big bulk of the first earnings season is over, and that would be the Goldilocks kind of situation. And really, the market is just begging for some serious price hikes or rate hikes. That's just my 2 cents. On the other side, if it's not peak inflation, if this comes in even at like 5.5, like even a little bit, oh, we're gonna dump so hard, right? So anybody that thought that this was the peak, they're just like, nope, take my money, go back home. And that's really what we're seeing. Like, it's just a lot of this indecision. So until we get this actual information, expect a choppy market, expect a wild ride, do some kind of non-directional neutral strategies. If you're an options trader, I'll probably be throwing on some like iron condors on likely the Qs where we have some edge built in and we have extra IV that we can take advantage of. But yeah, that's very much the plan. I mean, maybe tomorrow we get a little bit of a rally. Most of it's, like I said, likely just chop until we get closer to this, and it'll be focus is 100% on like the lifeblood of the market is earnings. So if you are in our IVES implied volatility events system course, please check your emails. You guys have a new link for this week. We moved the times back just a little bit. I'll double check just to make sure that you guys got everything. And let me see, do I have everybody? No, yeah. So I'm gonna send out another email thing. There's a new Zoom link, so make sure you guys um, register through that next Zoom link that'll come today, and that'll we start Tuesday, Wednesday, Thursday, and then that's it. Then you guys have learned the system, you know how to do it, and you're on your way, right? We've taught you how to fish. Cool. Let's get into it, right? This is what everyone's been waiting for. Not waiting for that. Let me see. Where are my indices? All right, so Steven is our resident indice trader for sure. What I have, so I typically start out with a 30-minute chart. I do have extended hours on, so it might look a little wonky. Last week, we started out right over here, and we were looking actually up around 443, 444 for some kind of resistance, like this selling pressure to hit. Little off, but we did run into this 200-day right here, and just that was like immediately slapped right in the face. These orange boxes here, these are an average week's range. So how do we get to our targets? We took Monday's open and an average week's range down, right? Actually put us right to this, just about this green line, which is just over 425, and looked to target this kind of prior consolidation zone. So that was just last week's target. So it's no longer last week, and we can move on. This week, let's see. What do you think, Steven?
Tough, but
I'm putting him on the spot. I love
yeah.
it.
No, it's all good. It's
Yeah.
right now at this exact moment, floating in between 420 and 425.
Yeah.
I can, like you were saying, I can see just us chopping around quite a bit. I could look for a pushback down if we push back up to like 425 ish or where we closed on Friday for a quick rush back down. Below 420 though, I could definitely see us move probably back to about 410, which was that low from, let's see here, back in February, end of February.
Yeah. I actually have what is this purple? So I have automated pivots. So this purple line up and down, this is last month's high, 440, 462, and last month's low at 415. So that's pretty much exactly, we're very close. It's about 5 points off. So 410 is right here. This is that, you're tagging this February low right there. So yeah, like if it were to take a quick bounce, I mean that's off today. But
Yeah.
so below 425, you're just not going higher, right? That's what we know is true, right? If we're closing below 425, we're not going higher. Doesn't mean that we're going lower. You know, it's tough. That was like I said. So this orange box is a average weekly range, right? So we went up a full week, and then we went down a full week. So in 48 hours, we moved two, two average weeks moves. I mean that's a big one. So yeah, I mean expect some chop, no question.
As far as like TA goes, if you zoom out to like an hourly or, a 4 hour or even a daily chart, um, you can construe this as like an inverse head and shoulders from
we get to draw this thing
the
again.
end of January lows and then the end of February lows to today, it just like wicked below 420.
Yeah.
You could construe that as an inverse head and shoulders on a larger time frame. But like you said, I wouldn't want to be playing anything to the upside unless we break above 425.50 ish.
Yeah.
To me, it's a little premature at that point to assume anything to the upside. Yeah, for right now, I do have a slightly bearish bias on this right now, just because of how hard we've sold off from last week.
Yeah.
I could see us kind of consolidating in this area for a little bit and then waiting for the decision on Thursday or Friday.
Yeah, so if this is an average week's range, right, and let's give them the benefit of the doubt. Let's say we do, start closing. Let's say we open tomorrow over 425.60, right? That makes today's candle right here a nice little hammer candle, and you'll have all the bears coming, or the bulls coming out of the woodwork screaming, right? But
Right.
to be fair, right, that would put your target on the upside 435, which is still firmly in a downtrend. 435 right there, and that would be completion of that type of pattern, and then go into one more holding day, and then boom, right into Friday. So we'll see, right? Those kind of things, very much, yeah. That would be this exact holding pattern, right? Right into this average weeks range. I mean, if you look at this, right, like you might have thought that the market has, been completely brutal, but it's been like hovering. I don't know how long is this, right? This is a 50-point range, geez, for the better part of 2 months. We've gone nowhere, like absolutely nowhere. So
Yeah.
just be aware, right? We don't want to shoot for the moon, right? No moon shots, definitely. Maybe on some wild stocks, and we'll get to that in a little bit. But yeah, this right now, nice little potential hammer bottom. We'll see. The day is not over. The day is young. The week is young, for sure. Above 425.60, yeah, you could start targeting probably this 435. Expect some chop. Man, if we really get back into it, I'm still gonna hold my my level like right back at this 443. Oh, if I get another shot, I'm taking it, man.
Mm-hmm.
I'm taking
Oh
it.
yeah.
But yeah, that's how we roll, right? It's just candle to candle, not anything more than that. So that's
Yeah.
fine.
And again, I don't want to predict anything that's
Yeah.
going to happen. I just want to be reactionary to what the price tells me.
100%. So I'm just going to move on to the Qs. So Qs, again, average weeks range, same thing here, right? We moved almost, and again, rule of thumb for whatever. If you move more than an average weeks range in a 24-hour period, you're likely going to go into a little bit of holding pattern. Not for super long, but somewhere similar. The Qs here, it's almost like a regular ritual for me, like right about now, to put on an iron condor. I might look at like NDX, something like that. But yeah, just to stay within this kind of general, I'd call it this little range right here. If you did want to do something, I'll take an average weeks range and probably just throw it right in the middle. Of all the indices, the least bullish is going to be the Qs for me. So an average weeks range, let me just zoom in here. If I slapped it right in the middle, that would put you up to like I call it 335 and 315. If I can find a condor, a neutral trade strategy that would benefit something like that, I would take that for sure. Otherwise, we did have this very funky broadening range. We'll see. We put lower targets around like 2, 3. I have something similar on SPY, but that's for if we dump. And I don't think it's going to happen this week. Maybe late Friday. We'll see. I do see a nice hot and heavy Friday session, no question. So diamonds, same thing. These guys were the index that was fighting the most. They're right back in line with everybody else now, so can't really say much good about that. I'm watching the charts. They're kind of starting to fight, trying to fight. We'll see. And yeah, I mean, this is all very similar. I think general holding pattern, I wouldn't be surprised to see like us close the week right around like 340, or maybe even like less of an average move. IWM probably a little bit different, so I'm not gonna spend a whole lot of time on this. We did have you're not out of this trading zone right here. If this guy breaks, that's gonna be a pretty big move to the downside. This one does pretty much what it wants, the black sheep of the indices, no question. But yeah, you got a pretty critical level, 188 on IWM here. And this guy, this is what happens. So we have this one will tend to be in a very hard holding pattern for a while. So If it breaks out of this one after it's just broken out, that's a pretty quick move. We know that this guy, as opposed to the rest, had actually been trading less than an average range for quite a while. So again, here's an average range. So this went almost like 2 weeks in less of an average week's range. So this is what put this on the radar for me. A couple things. Let's take a look at the VIX. So option traders for sure. My short trade is happening. I know. Option traders, we want to take a look at the VIX as a staple, right? This is just a general gauge. I don't trade it as much. You can use it as a hedge. Probably up here is going to be a little tough. At this point, this is when you would want to look at some type of ratio spreads on the VIX. So it's going to be too expensive for me personally, too expensive for my taste to be on a just hard directional trade here. I know that we just popped up. Every time we pop up really quick up into this kind of range, look, this box is here for a reason. We go up, maybe like we'll typically have a quick down day and then potentially pop again. That puts us right into that Friday range trading situation actually. So I would expect a little pullback if you're long, say UVXY or something like that. Probably take some profits and then look to put it on when we're trading. It's probably around 25, 26-ish. Throw some extra protection on right around that level. So one thing that was weird for me is I'm watching gold, right? So we're looking at, I have a lot of inflation like buckets, and gold, silver, GDX, definitely one of them. I'm like, oh, this is killing me. So why is gold selling off? Yeah, I don't know exactly why, but what I could tell you is that, I've been watching this Dixie, right? So the dollar index, and we went over this last week. This is essentially the US dollar weighted across other global currencies. So what does this index actually tell us? Well, it tells us that people are running to cash. So are they running to gold right now? No. They were for a little bit, and now they've taken profits. Last week, at the end of the rally, it was like all of the safety trades just fell apart instantly. So, it's going to be a little weird. I think this might recover first. I'm not seeing any life in it, so that's my gut. You trust your gut, and sometimes you get some big losses. So I'm not putting anything on here right now. It's a tough one, a definite tough one. The one I would just keep this dollar index DXY. If you're trading it, it's UUP is the ticker. I would put that one on your radar, just equally up with the VIX right now. I think that if you want to follow, the term is what, follow the money. The money is right now, it's going to the dollar. You'll hear, mainstream media tell you, oh, the dollar is such a horrible place to be. Cash is horrible in an inflationary market. Well, that's not entirely true. It's timing, right? Like, would I rather be in cash over, Facebook? Last 30 days, yeah, for sure, right? Like it's all your time horizon. So, in the short term, you can be in cash, man. Don't let them tell you any different. They're talking like years and years out, right? So I don't think anybody's going to be sitting in cash for that long. Bonds, on the other hand, so this is the TLT. This is the 20-plus year bond. And I've been watching, waiting. I wanted to get a short somewhere up here. I think this is as close as I'm going to get it, so I'm probably going to throw a short on today. I will say, this guy, I'm a little torn. I might throw a condor on here. These guys are way, way through the roof already, like way sold off. This is that CME. Mara was talking earlier about what's priced into the market. So what we know is that the TLT has an inverse relationship to the yield. This is the bond itself. What is TNX? TNX, as an example, is a 10-year treasury yield. This will be inverse, right? It looks like it's flying. Do you know what the 20-year yield is?
Not off the top of my head, I don't know.
Yeah. Nobody knows. TNX, who knows? I think it's T20Y. Breaking even now. Anyways, there's a yield which is different than the actual. Why do you have it? Yield. Different than the actual bond, right? So the bonds will have an inverse relationship to the yield. So US5, here you go. 1. So US20Y. There you go. That's the yield. So this is the yield, and this is the bond, TLT. Inverse. So I think, oh God, am I missing it right now? I probably am. That's okay. We just kind of capped out, right? Like we've got a lot of this stuff priced in, and I'm looking at, so we were talking about 50 basis point hike. I'm actually looking at this CME watch tool. This is like target rate 75 to 100. Like is that really, are they pricing in 75 already? It looks likely. So this is the target rate rather. So 50 basis point rate. I have to know what we were trading at right now, which I do not. So I will stop talking on that point. But in terms of probabilities, this will be your site that actually kind of like charts all the like what's priced into the market. So rate hikes, however many for this year, next year, the following year, and where they're targeting the interest rate to be on the Fed bonds. Cool, very cool. So I like this short. I don't think it's gonna fall too much harder because the same thing. It's already moved quite a bit. Like I did have a long term 112. I might throw that butterfly on today. I do like the butterfly just from a decay perspective, knowing that we will likely have some chop across the board. So yeah, here we go again. More just more chop. I'm looking at the market. It's just gross. Yeah, sideways. Look at this. Up, down, up, down. Good luck. You got to be scalpy. Super scalpy. If you're looking for hedge, you could, of all the indices, like the keys are the least bullish. There's SQQQ. There's SPXXS. That is the inverse, leverage ETF for some short-term hedges. Not anything that you want to hold any long-term. Do you guys have any stocks that you want to take a look at right now? I have an IBM short on that I'm in love with. Oh goodness, this was some crypto stuff. Yeah, by the way, crypto is just following the cues. This is looking ugly. We were watching this the other day. I do have IBM. So IBM short went on right here Friday at the close. Pull back, cut about 50%, and this is that chop, right? So I have a stop somewhere, probably up here, if we do break, but I don't think we will. I think we chop a little bit more down. If you have this on, you could probably flip it to a condor by selling a 120, 110 put spread on top of the 130, 120 put debit spread. Just makes it a 130, 120, 110 put butterfly, targeting really right around here, this 200-day, and the low end of this weekly range. So I still like that. What else do we have? Ken, you got something? Ken's always got something on the hot list. Twitter. I think Twitter's just going to stay out of going to do its own thing right now. Look at this. We got a headline, right? Is this official? I know they were talking about it's official.
It's official, but just based on the rhetoric and everything on Twitter right now, coming out of Elon's Twitter and all of that, it sounds like they're close.
I think he's going to do it.
Yeah.
The question is, if you're looking at Twitter, okay, is he going to take it private? If he takes it private, 54, you're done. Be out. Bye-bye, right? Because you're not going to get any upside above that. If he doesn't take it private, and that's what the question is, well, that's completely different, right? That means that this thing could go to the moon. If I look at the calendar, I believe they report Friday or Thursday. So if I look at Thursday, I can take a look here. Where's our Discord. And we got our crew that's sending us our lists all the time. Earnings. Oh, okay. So, wow. We have Monday. We got GE today. 3M, Pepsi, UPS, Valero, Whirlpool, Waste Management. Okay. Tuesday. Oh, God. This is a huge look at this. You guys won't believe our list here. So Monday, we already have it written out. Tuesday, all of these, we're gonna that's a big day. Tuesday, Visa. I know Twitter's in here somewhere. Not Wednesday, probably Thursday.
Oh yeah, we're gonna be busy this week.
Team. Wow, where's Twitter? Let's search. It's coming soon.
You just passed it right there.
I did. Thursday.
It's above team. Yep.
Team.
The day before team.
I
just saw it.
Twitter. Yeah, so Wednesday. If you're gonna put a trade on Wednesday on Twitter, it's got to be Wednesday. That's your last day. Dude, maybe 55 calendars, something like that. I don't know. It's like, what's the board gonna say? They're supposed to be reporting last quarter's results.
Right?
And they're super like conservative. Are they gonna talk about this Elon shenanigans? Probably not.
Well, yeah. Their whole thing was, well, just wait until we report earnings because we're gonna find that Elon's offer is undervalued for what we think it is based on previous quarter's earnings. Which
there you go. If they blow it out,
be?
yeah. If they blow it out, like they want other buyers. They need a bidding war for this thing to go anywhere. But 54 right now that's your kind of cap. So if you're above that, I'd probably be a seller. Personally, below that, probably be a buyer. You got a little, what is that? 10%, 5% ish, 10% ish discount this morning, which, yeah, that's probably fair. Let's see. SoFi, on this list, six and change. Yikes already. What I can say is, we will typically look. Some people will throw some pretty wild trades out there when it comes to earnings. The ones that typically do not move more than their expectations, more than their implied moves, are like Apple, Microsoft. Those typically will not. McDonald's. What you can do if you want to do some directional trades, try to find something that's like a more mid to low cap, mid cap. The one exception I'd say is Facebook. This thing is dump city. I'll just take a look at this real quick. I use this site, Market Chameleon. And you would go here, Facebook. On the left, they have a little earnings tab, and it'll tell you, look, IV is insanely high, 99 percentile, but they did have this huge gap, 26% to the downside. Other than that, this is like a one outlier. We might get another one. So, I mean, just know, like, it's pretty beaten down right now. This was trading at 330 to 312 when it came out, and then opened the next day at 230. Oof, what a dumb city. Before that, yeah, they really weren't moving that much. So Facebook might be your outlier. The ones that do move a lot, we do have Pinterest coming out this week. Look at this, 11, 18%, 14%, 26%. That's a wild mover, no question. Who else do we have? Google. I know everybody's going to look at Google. You can play directional calendar, but look at this. Look at that track record. That's beautiful. I will say that before these last 6 earnings, I remember trading Google thinking that they were going to do good and that the market was like not, and they were dumping before that. So this is just the last year and a half of reports. But typically, I mean, they had the biggest move so far, 7.5%. We'll probably get something close, priced in closer to like 5%. So it's potentially, just tread very lightly. It's going to be a very expensive stock. I think what's, the upside is that a lot of the stuff is coming in pretty oversold. I hate to say that term because that's the worst it's the worst indicator to ever use for trading is
Right,
RSI. But they're coming in pretty beat up, that's for sure. Um, if you want to do some like easier non-directional things, take a look at companies whose peers have already reported, and those moves are likely to be muted and very very easily taken advantage of from some things like iron condors, iron butterflies, or sometimes spreads of your choosing. So on that, what do we got? Roku, yeah, big mover for sure. 23%, 11%, 12%. I can see another 20% mover. But hey, we had Snap too, so just be careful. Snap was a good. I saw a buddy of mine throw out a huge bet on a Snap straddle, and I looked at it after the fact, and I hit him up, and I was like, dude, don't like that was a good trade. To be fair, he of the last six, it would have like 60% before 26, 23. The last few quarters, we've been calling this like the year of the straddle because implied moves are actually less than what the actual moves have become, which is a rarity. It is a rarity, but we've had that twice in a row. So maybe it's coming to an end. We'll see. I think that the options pricing model is starting to price in those last two, almost 3 quarters of uh, over average moves. So it's going to be a little bit tougher. So just pick your poison carefully, and just know, the larger the market cap, the harder it's going to be to really move quite a bit. We do have Intel on Thursday. This is the same one. So Intel has always been a pairs trade. Intel reports. I don't really trade Intel's report that often, and I would typically go long AMD. I think for as long as I can remember trading this, because if Intel reports bad, that's typically good for AMD in terms of market share, and if Intel reports good, that's typically good for AMD in terms of market share. So that's been that trade for quite a while. That's Thursday, Intel reports, and again, Roku on Thursday also. Team is a wild one, so sometimes you can do a nice little. Wow, what was this trading at before? Am I crazy? Is this like way down? Holy moly!
yeah. Oh yeah.
Oh yeah, I remember it up here. We traded it up here. It was like 4 something. So team typically actually goes up. Look at this, 9, 9, 21, 4, 4, 4.5 down, 1, 1. So if you were to take a directional bet, I would do something like a team, right? This kind of fits those categories. Yes, Ivy is through the roof. If you're gonna look at this and do either straddles, long straddles, meaning like buying both the put and the call at the money, or strangles, you want to look at what you're paying for the options, plural or singular, whatever, and think of it in terms of what's called intrinsic value. So you want it to be in the money above what you're paying for it today. IV in those instances really doesn't matter that much, to be fair. It's just about, is the intrinsic value of the position going to be greater than or less than after the fact. And so if you go long options, you're looking for that intrinsic value to be greater than the value, that the price that you're paying for the options themselves. So I think that's as good as I can get it for you guys, just for our weekly prep. So again, Thursday, Friday, we start getting into actual economic data, with Friday being a huge day. So today, really, we kick off earnings. Today, Tuesday, Wednesday, Thursday, earnings. Probably chop on the market, on the indices. You got a handful of good potential plays out there. PayPal. I know a lot of people looking at PayPal. What's PayPal? PayPal, man, that thing is actually a mover, to be fair. PayPal is going to be Wednesday also. So, PayPal. Yeah, 24% last quarter on PayPal. Holy.
So, oh yeah, I remember that.
So that's a 24%, 10%. Typical move is in like this, like around 5%. So you can. So here's implied straddle. There you go. This is what the pricing model was pricing in 8.4. This is a good example of what I was talking about earlier. So the option pricing model will start to adjust for these averages. So last 2 quarters, insanely high moves, larger than average moves. Now this quarter, we're starting to see some of the impact where the pricing model is actually implying a little bit bigger than average. It's taking this prior two moves into consideration. So 2 quarters ago, 3 quarters ago, 4.1% implied move. Now, as we see, like everything moves forward, it gets a lot harder to find these kind of situations. Uber outside IBM crowd. Okay, cool. I'll take a look really quick. So Uber, Ken says IBM to the moon. Uber outside candle. I'm assuming like daily. Yeah, daily outside candle. Yeah. So cool. So hammer down in. So when you get an outside candle, this is these big white ones. It's typically choppy. It could be directional, but we want to take a look. Yeah, right here, 32 could be your. It could either be short, but you don't want to try and take a continuation on the outside candle. It's like that engulfing candle that everybody says, oh, it's a bullish. I don't know if I could say much directional out of that, but you'll get this kind of consolidation period, and it could go very easily short, right back down to where it started, or go right back up to where it started. But you'll have this general consolidation, which you haven't broken yet. So it's either going to be here to there, oops, or right to there, something like that. Actually, in that case, you'll probably get a minute to check, but very likely you see something like this. And be quick with your profits, because on outside candles you can get a lot back to back to back. Full range, full spectrum. That's when people get whipped around. Play both sides though. What else we have? Crowd. So InfoSec security, information security, InfoSec. Probably the most defensive situation across the market. Actually, did you guys see Palo Alto? Like one of the few that was up. Palo Alto up 4%. I guess that was pretty beaten up. Range bound market. We are doing what? Buying at support and selling at resistance in both, right? If that's what we think. So you're 234. You got a 200-day in the way. So this might look like that SPY situation. So outside day for sure. Inside hour. Yeah, so if this inside hour here breaks, see this consolidation, right? That's typical. So once you get a break of this consolidation, either it goes like that and you head straight towards this 200-day, and but expect something like that when you have those setups, right? Either way, could do in either case, but you'll have some pretty nice trades available. Just take them for, short blips, and that's what is that, from 215 to 225? That's $10 on an option trade. Super, that's clean. Otherwise, yeah, 210 to 200 also clean. Good profitable trade in either direction. So just be open. Cool. All right, guys. Appreciate you hanging out with the technical difficulties. You rock. Didn't think we would have that many people be able to find us and jump in short notice. So you did. Awesome. And my TLT short is playing out while I was hanging out with you guys. So cool. I'll see you out there. Adios.